Hey guys, Akil Stokes here. In today's episode of the Midweek Markup, we're going to follow up on the trading opportunity that I showed you guys in Sunday's Trading Edge video on the pound dollar and show you a different way to take advantage of what ended up being an excellent trade. Now, before we hop into the video, I want to remind you that next week, starting November 15th, we're kicking off a 4-day free online trading workshop called Ascension. Make sure you sign up right now using the link below. Obviously, if you are able to attend live, do so. You're going to get so much more value out of the workshop that way. But if you can't, make sure you sign up anyway. That way we can mail you the recordings after each day is completed. So again, Ascension Workshop, November 15th, 4 days, free. Sign up now, take part into it, and enjoy today's video. Many different lights as well. I believe we were talking a little bit about volume again yesterday. Anything interesting with the breakout candle? This shoulder? Actually, I guess the shoulder is right here. Oh, I'll take that back. Never mind. Technically, the shoulder is right here. If you're doing horizontal, if you're doing slanted, it's there. But let's say you had good volume on the breakout candle, which is a positive sign. Oh no, we did. Yeah, we did. Sorry, looking at the wrong candle. But yeah, no pullback, no retracement. Now, maybe I didn't look at a range bar chart. Maybe on a range bar on a lower time frame, right? We know there's this little wick here, which means there was a retest. So down on the 15, if we go back to that area, right? Look at that. So 15, we see that we had breakout, retest, pullback basically, before the follow through. I bet on a range bar chart that was a legitimate signal. What do you guys think? One of the beauties of, again, if you're a lower time frame trader using the range bar chart. Let's look at an 8 range. I bet. Because it's gonna break that candle up into different pieces instead of just having a single piece. I gotta figure out where that's at because this is gonna look a little bit different. This has to be our shoulder. So it's right here. So here's what it looks like on an 8 range bar chart. The 15-minute chart here, a 5 range is gonna be more equivalent to that. But I want to draw it on so we can see what it looks like. Let's see if it, look at that. There you go. Not only that, but what else did you have there? Not only did you have the pullback, not only would this have been your higher high, higher close if you're using an aggressive entry reason, your pin bar, higher high, higher close. But you also got a daily chore candle. randomly sneaking in there. So that's pretty cool. So again, 50 range. If you got, I think everyone is anyone in here not familiar with the range bar charts? We just had about 7 more people come in. Let me know if you're not familiar with the range bar charts, and I'll kind of explain how we use them. But it looks like everyone is. Yeah. So a 50 range, which is really a 5 range because it's stupid micro pips, is equivalent to the 15-minute chart because the ATR is about 5. So this is what it looks like on the 15-minute chart, which again, and this is how I use the range bar charts for day trading. Absolutely, I don't want to say absolutely nothing, but there's no way that I can enter here. I would guess a lot of people, right? We can see it's a pullback, but it doesn't really look like a pullback. Probably not much you can do with that information on a 15-minute chart. So what I like about the range bar chart is that it's not minute-based, it's tick-based, right? So it breaks these candles down, right? See this green candle? So that one green candle, that 15-minute candle, is basically all of this, right? Let's see. This was, yeah. So this was 6 o'clock right here. This white one, and then 6 o'clock. Oh, I take that back. It was more than these candles. But that basically breaks up this move right here. That started kind of right down here. So a little bit before. So this candle was actually 7 o'clock. I had the wrong read. I apologize. 7 o'clock was that candle. So we're looking at these four right here, the breakout candle. And then that red candle, this single red candle right here, the pullback, that is these black ones right here. So it gives you a different view. Instead of just seeing kind of a candle, a candle, and a candle, it actually gives you the move up, the retracement, and that. And if you're someone that's looking for a pullback, boom, you've got an entry here on the 5 range, right? Pin bar, higher high, higher close, or again, if you're looking for a daily chore as well, where on a minute chart, there's not much you could have done about it. So I always say the range bar, well, love-hate relationship with them. Range bars were my favorite charts to use. I think part of it is because, I don't know, I think part of it is also because it's, it's not as common, so you feel kind of special, kind of like braggy, where you're like, yeah, just executed a trade in the range bar chart, and everyone's like, ooh, what's that? But I really, like, it's, you know, I really enjoyed watching, and I still do enjoy, I really enjoy watching, like, because we know the market moves in fractals, guys, right? I really enjoy watching, like, the move within the move. So I like seeing, like, a red candle, and instead of just, like, one red candle, I like kind of seeing, like, what happens in that red candle. You see it a lot. If you ever want to do something really, really cool, watch the range bar charts during a high impact news event. I think I've said this before. I probably have, because I've been teaching for like 20 years. Watch the range bar charts during a high impact news event, and you see, right? So, you know, in high impact news events, the market, like, it starts off bullish, then it goes bearish, then it gets sucked up a little bit, then it continues low, right? I always see cipher patterns. I always see cipher patterns. So you go down to the range bar charts, and they're not tradable because it happens way too quick. Don't get me wrong. But you see, like, here's your opening for the high impact news event, and then the initial move is up, right? But then there's a little pullback, and everyone thinks it's a false breakout. But then it continues up, and then everyone gets involved, and then it whips you down and confuses you, and you're like, oh no, I was buying, and now I'm wrong, and now I got to sell to get out of it. Or sorry, let's do that back. So here's how it typically works. And you'll see this with news events a lot. So here's the initial move up, right? Boom, market goes up. And what does everyone do? Buy, gotta buy. And then it kind of whips them back down. It's like, oh no. I gotta get out of it. And then it whips it back up. And the more late buyers enter. And then it whips it back down. And then those buyers try to sell to get down with it. And then it whips it back up again. And you see these cipher patterns form. I don't know why it's the cipher and not other patterns. But, like, I used to watch non-farm payrolls for a long time and just watch the range bar charts. And it's crazy how many times you see a cipher form within that, or a cipher type pattern. I never actually measured them out all the way, formed during those type of times. Now, again, you can't trade it because all this happens in a matter of, like, minutes, and you're going to get slipped massively. But it's, like, really interesting to see the move within the move. And then it all ends, right? It ends, just ends up being just one candle that looks like this. At the end of the day, you go back to a minute chart, it looks like that. And you're like, ooh, this candle went straight up. And it's like, nah, it didn't. Have you done any videos on range bar charts? Yeah, I got a whole course on them. It was originally going to be called the range bar course, but then I changed it to the day trading course because I didn't want it to seem like it was specific for range bar. Yeah, got a whole course on it.